is Tuesday, March 29th. The Tax Committee will come to order. Our first bill is Senate File 1562. That would be Senator Rosen. Senator Rosen, welcome to the committee. Members, just so you know, we have 4 bills today. The intention is that they will all be laid over for possible inclusion. Senator Rosen, to your bill.
Thank you, Madam Chair. Senate File 1562 is going to tug at your heartstrings because it's a sales tax exemption for nonprofit animal shelters.
Before we start, I'll have Senator Weber move the file, please. Senator Weber.
So moved.
Thank you. Senator.
Thank you, Madam Chair. And we do have the A1 amendment, and
Right,
basically it's a technical change. It changes the date to June 30th, 2022.
Okay, members, that's not in my packet. Do you have that in your packets? Okay, thank you. All right, Senator Weber moves the A1 amendment. Is this an author's amendment?
Yes, it is.
Senator Rosen?
Thank you,
Okay, we'll
Madam
just
Chair.
adopt this as the author's amendment. This is the first stop. All those in favor of the A1 signify by saying aye. Aye. Opposed, same sign. The amendment's adopted. Senator Rosen, to your
Thank
bill,
you.
as amended.
Thank you, Madam Chair. Senate File 1562 has 3 sales tax exemptions to it. Number 1, for the purchases made by shelter that are used for rescuing, sheltering, and finding homes. And it does not apply to building construction materials by a contractor in a lump sum contract or construction materials for facilities not used by the shelter. It does not also apply for lodging, prepared food, candy, soft drinks, alcohol, or leasing a motor vehicle. The second part of the bill exempts sale or adoption of animals and animal supplies and equipment by the shelter. And the third piece provides exemption for sales and events for fundraising purposes. And those fundraisings, total fundraising cannot exceed 24 days per year. The fundraising events must be conducted on premises for 5 or less days. And admission charges are not exempt if involving bingo or gambling activities. The state revenue will be lowered by $1.65 million in 2023 and $1.8 million thereafter. Madam Chair, members, there's 75 registered nonprofit animal protection organizations registered with the IRS in 2020. This bill was originally brought forward by my old representative, Bob Gunther, in 2016, or maybe 2014. It's been a while. And he felt very passionate as I did about this. Animal shelters are taxed on the care for the vet, and then they're taxed on the cost of preparing that animal for adoption. And then just to make ends meet, these animal shelters have to have fundraisers, which again, they are taxed. So we cannot underestimate the power of a companion animal, especially after these last 24 months. A companion animal, as we have all experienced, can aid mentally and physically to the adopter. And that, I always think of that bumper sticker, "My dog rescued me." And Madam Chair, members, I had a dog that I rescued at 9 years old, and she died just last summer at 18. And she truly loved me. I loved her dearly, Cece. So this bill is about all those rescue dogs that we've had in our life, and I know many of you have had that. So the payment of sales tax can deter a potential adoption, especially if they're low income or a fixed income person. Removing the adoption tax would increase the chance of an animal to maybe perhaps find a permanent home. Especially in the rural areas, animal shelters are run by volunteers, and the bandwidth for collecting and submitting taxes is time-consuming and difficult. And this time can be better spent caring for the animals and finding permanent homes for them. And with that, Madam Chair, I do have a testifier, Vicki Beckendorf from Odin, Minnesota, which is south of St. James. I believe she's testifying virtual.
Welcome, Ms. Beckendorf.
Thank you very much.
Please introduce yourself for the committee and begin your testimony.
I will do that. I am Vicki Beckendorf, and I have been living in this area since 1986. First of all, I'd like to thank you for the chance to speak on behalf of shelter pets, especially to Senator Rosen and Representative Olson from my area for authoring the bill. Others involved Kelly for helping to arrange sometimes an iffy connection out here, and the tax committee for agreeing to a hearing. I live on an acreage in southwest Minnesota. I've been adopting rescue pets since 1986. I have 4 dogs and 5 indoor cats. In my barn, I have 8 more cats and 5 potbelly pigs. They mostly come from rescues and shelters in Jackson, Martin, Watonwan, and Cottonwood counties. I'm very familiar with the work each organization does. Shelters range from a network of foster homes to former pounds to built facilities. Most of my pets' financial burden when I adopted them was on the shelters from where they came. Shelters rely heavily on fundraising to cover their costs and volunteers for staff, at least in rural areas. Most rural shelters I know of do not have paid positions. If they do, the volunteers and foster families far outnumber those receiving paychecks. I only paid adoption fees on my dogs and one of them at a reduced rate. The dogs and pigs and 4 of my cats were all spayed and neutered, and their shots up to date before I got them, financed by the shelters. One of my cats does not have teeth. Herbert was found in Wyndham, very thin with decaying teeth. The rescue paid to have his extensive dental work done before I got him. The remaining cats wandered into my barn from wherever, and I took care of their medical needs. In my area, I am often the first called when someone has grown tired of their previously small baby potbelly pig. Most grow to about 100 or 150 pounds. They are not usually zoned for someone to keep within city limits, so their options are limited when they are no longer wanted. Oftentimes, they are dumped somewhere. Mabel was less than 6 months old when she was found in a farm field near Gakeen. She is a small potbelly and probably just 40 pounds at most. And I'm surprised the coyotes didn't get to her first before the rescue did. Elmer was purchased for the amusement of someone's grandchildren in St. James. After the novelty wore off, the grandmother threatened to shoot him if another home was not found. Buford was dumped off at a hog farm near Henderson. Arthur, first purchased as a pet, was going to slaughter if he was not rehomed. My past pigs include Ellie Mae, who was purchased by an uncle for his niece, who had so little interest in her that Ellie Mae was rescued without a name. Howard and Shirley needed a home after their pet parents divorced. The only exception to this sad parade of stories is Ethel. Her human mom still comes from the Twin Cities to visit Ethel, who after a few years made it clear through a change in behavior that she wanted to live outdoors and with other pigs. I mention all of these pets to describe the wide-ranging animal kingdom shelters try to help and then place. It's a challenge to find homes for them. My pig Arthur was fearful of people. I witnessed him being kicked by his previous owner. It took me 8 months before I could pet him and another 4 months before I could walk around near him without him flinching. Shelters also provide extensive behavior therapy when needed before pets are offered for adoption. And once a home is found, the expense does not stop. One of my formerly barn kitties, Reginald, was just diagnosed with diabetes. He's in the house now. Their food and medical bills are not small. My investment is substantial. Paying extra in state tax makes it harder to agree to give these pets a home. It amounts to less money available to provide for them. Shelters do not offer pets for sale, so why is there a sales tax on them? The adoption fee is small compared to what a shelter invests in them. Adoption fee is not a euphemism for the word sale. If they were offered for sale, the price would have to be much higher to cover their bills once a shelter rescues them. Veterinarians often discount their services to help with the shelter's costs when treating the animals. There would be no incentive for them to do so if the pets were offered for sale at a profit. I have listened to testimony and hearings on this bill in previous years from people who breed dogs. I value what they do and the service they provide. This is a career for them, and they are experts in their specialties. Those who want a pet with certain behaviors or size or other characteristics can look to the breeders. A glance at listings in the Star Tribune from last Thursday and Friday has puppies for sale in a $300 to $3,800 price range. Most are much more than $1,000. An argument from breeders who are against eliminating the sales tax on rescue pets is that doing so would be the equivalent of a subsidy, thus harming the breeder's income. But I don't think people who want a purebred dog go to a shelter to find them. In the years before shelters realized they should have been collecting tax and were not, was it hurting the sales of purebred dogs? Did breeders then see an increase in sales once the tax started getting collected a few years ago? I don't think the two types of dogs, bred and rescued, and their situations are comparable. There is a big difference between offering a purebred puppy for sale, essentially selling the specific characteristics of a breed for profit, and the Heinz 57 dogs typically found at shelters, with an adoption fee to offset part of the cost of rescue. Breeders plan for litters. Shelters plan for the unknown and unwanted. People who want to take a chance on a rescue pet often do so because there is a great need for shelter pet parents. Eliminating the tax on an adoption makes it easier to adopt. Most shelter dogs' fees are upward of $200, plus a tax of 6.875%, usually around another $20 or so. No, the fee does not come out of a shelter's bank account, but they have additional paperwork and bookwork to do. And it does come out of a potential adoptive pet parent's funds. Inflation is in the back and maybe front of everyone's thoughts right now. Caring for animals can be expensive, but they provide companionship, fun, exercise, and unconditional love, especially for our elderly population who often have limited funds. I hope the Minnesota legislature can find other options to fund the budget without also collecting tax on shelter pet adoptions. Any way to reduce the adoption fee that by no means covers the care that pet receives would help pets find their way to a new home. One of the officers at the Martin County Humane Society said they rarely make enough on adoptions to cover the intake costs they incur to get pets ready for adoption. If shelters could keep the entire adoption fee instead of paying part of it to the state as tax, more money would be available to help the pets they care for. I'll close with a story of I met Cheryl Bioin in 2014 when I wrote a story about the Watonwan County Humane Society. She was president of the organization at the time. One of my questions was asking her to name a highlight of her work at the shelter. She took me to the dog kennels and pointed to a small female pit bull, about 1 year old. The shelter housed a lot of them that year. They can be hard to rehome. Doris had been severely injured during an attack. The shelter volunteers knew the veterinary bill would be substantial and finding a home for her difficult. But Doris is one of the friendliest and sweetest dogs they had cared for, so they decided to do the surgery and rehabilitation. I fell in love with her after she greeted me and hugged me with her front legs. She needs special accommodations and has minor chronic medical conditions, but there is no question that she is happy, healthy, and much loved by my other pets, my husband and me. But her story is not unique, nor are shelter responses to animals in similar distress. These pets are almost always hard luck cases with nowhere else to go. I saw no classified listings for pit bull puppies in the paper, yet many are waiting for homes. Please let shelters keep the full adoption fees so they can direct 100% of that money to their urgent and mostly volunteer rescue work aiding animals. Please find a way to relieve some of the financial burden on those who choose a shelter pet by removing a potential barrier and making it easier to welcome someone like Doris into their homes. It's the right thing to do. Thank you.
Thank you, Ms. Beckendorf. We saw one of your lovely pets making an appearance on the screen. Your
That was Charlotte.
Charlotte, we welcome Charlotte to the tax committee. I'm glad, and she made sure she got her face in the camera. We're very glad about that. Sometimes we just see the cat's tails, but we got to see.
Right.
So, thank you so much.
You're welcome.
Senator Rosen, do you have any further testifiers?
No, I don't, Madam Chair.
We'll go
No.
to comments then,
Okay,
and
thank you.
questions from the committee. Any comments or questions? Well, Senator Rosen, I appreciate this bill.
Thank you.
And we all have those special bonds with our animal friends. And I often think that our world would be better if we had more of those bonds. And I want to thank you for bringing this forward. I think about Paws and Claws in my area, which does a wonderful job. And also I think about my neighbor who was an adoptive. We have adoptive pet parents until owners can be found. And so there's been a broad effort to rescue these animals. And I think your bill today demonstrates the deleterious effect that taxes can have on doing some of these much-needed and supported services by just making them more expensive or out of reach for many. So any further comments, members? Senator Bach.
Well, Madam Chair, I'm just curious, maybe the testifier knows, but this is for nonprofit animal shelters. I'm just wondering if there are other businesses that do this kind of work, animal shelter work, that maybe aren't nonprofits, but maybe have a book of business where they do that as part of their regular order of business. And this wouldn't apply to them, I assume, but are there, I mean, the department's analysis says there's 75 of these types of nonprofit businesses in Minnesota. I'm just wondering if there are others that do this that aren't part of the 75.
I don't, thank you, Senator Bach. I don't know if we have anyone from the department on today that could answer that. Ms. Beers, are you in the room? Oh, Ms. Beers. Welcome. We're not going to let you stay in the back there. Ms. Beers, do you happen to know, are there for-profit animal shelters in Minnesota? And if so, if you happen to know about how many?
Madam Chair,
Ms.
members of the committee, my name is Joanna Bears. I'm the Legislative Director for the Minnesota Department of Revenue. Madam Chair, Senator Bach, I do not know if there's private animal shelters in Minnesota, but I can get that number for you if there are.
Thank you. That is good to know. We don't want to disadvantage one business over another, but I did notice Ms. Beckendorf's comment regarding breeders, which is a very different subset. That's not a competitive issue at all. They're the opposites in a sense. So, all right, thank you for the good question, Senator Bach. Any other comments? Well, Senator Rosen, closing comments.
Thank you, Madam Chair. Well, as you can see, we probably need to get better broadband out to Odin too, but she did pretty good with the capability out there. But I just want to say that this truly would make a difference for those rescue animals that are out there. I have never not had a dog in my life, and I've always had rescue dogs. Cece was deaf, going blind, terribly out of shape, and I will go back and get a dog that needs to be rescued, but I can afford it. But there's many people that want to have a companion dog, somebody that is with them all the time, and who knows what we're going to be facing in the future with another pandemic. But this is critical for the people that can't afford it, I think. And like I said, the low income, fixed income, and it's also just a fairness issue. It's a fairness issue. They have to resort to fundraising constantly, and the good graces of people in the community to volunteer to provide for these dogs. So I hope that we can do something for these animals. That's what it's about. And I'm glad I didn't cry. Thank you, Madam Chair and members.
Thank you, Senator Rosen. Senator Weber renews his motion 1562, and as amended, it will be laid over for possible inclusion.
Thank you, Madam Chair.
Thank you, Senator Rosen.
Thank you, members.
Members, next we have Senator Howe back in the Tax Committee, Senate File 3018. This is dealing with certain diagnostic testing kits and equipment exemption provision. Senator Howe. Senator Gazelka moves Senate File 3018. Senator Howe, to your bill.
Thank you. Thank you, Madam Chair and committee. Senate File 3018 it came to me from a constituent that had purchased some test kit and was shocked they had to pay sales tax on it. Then myself went to buy a couple items and to try to make sure that I was staying healthy, and was shocked that, and it came to me that why are we taxing, if we want people to stay healthy and they want people to maybe go get a blood pressure cuff, a sphygmometer and that type of thing, why are we taxing those things and making it more expensive for people to keep themselves healthy? So that was the reason for the bill, and that's why it's here in front of you today.
Thank you, Senator Howe. Senator Howe, do you have any testifiers?
I do not know if I do not believe that we got in contact with the constituent in time to get them on to testify.
And,
So-
thank you. And then, Senator Howe, I'm just wondering, and maybe it's further described in the bill language, or maybe staff could help too. Is there further definition of what diagnostic testing kits and equipment are? What would be included, what would not be included?
I'll leave that to staff to describe.
Ms. Pollock?
Madam Chair and Senator Howe, yes, the definition of diagnostic testing kits and equipment is comprised of two kind of concepts that start on 1.11 through 1.18 of the bill. The first kind of category is something that you could purchase at retail that requires kind of collection and self-observation of data or information, and does not require, further kind of expert or trained analysis in order to interpret the results. Something in that category might be a COVID test, a pregnancy test. And then the other category is also something purchased at retail by an individual for single use, that would require a collection of a biological sample to be sent to someplace for analysis and testing and determination of results. And an example of something like this might be a food allergy or sensitivity test that would be mailed in and analyzed.
Thank you, Ms. Pollock. And I noticed it does exclude tests for DNA analysis. Why is that?
Madam Chair, I believe that was Senator Howe's preference when we worked on crafting the bill.
Senator Howe?
Yes, Madam Chair, if you want to check your DNA and find out who you're related to, I'm really not, I really don't think that plays into trying to keep yourself healthy.
All right, thank you, Senator Howe. Well, definitely appreciate the effort here to try and hold down those costs of staying healthy, diagnosing or getting information that might lead you to further medical care if needed. The one thing I would note is that we do, unfortunately, still tax every item, every healthcare service in this state by about 1.8%. We've just increased the cost of healthcare by putting that tax on there. I appreciate this bill, which again shows the deleterious effect of taxing items that people need. Further comments? Senator Klein.
Thank you, Madam Chair and Senator Howe for the bill. So I also just had questions and maybe suggestions about how to refine the definition of what we're trying to not tax here. I thought your idea about a blood pressure cuff was a really good example of something we would want people to purchase and not want to tax, but I don't think that would be covered under the language here because it requires sort of collection of a biologic sample.
Right.
Similarly, during COVID, a lot of people bought these pulse oximeters, which were really helpful and actually, improved health care quite a bit at home. Those wouldn't be covered here. I think what would be covered would be things like COVID tests and pregnancy tests and so forth, and that seems reasonable. But also, as council mentioned, some of these more fringe and less legitimate enterprises like saliva allergy tests and so forth, which maybe don't have a lot of medical backing. So I think there's room to sort of define more precisely in this bill exactly what we want to exempt from taxation.
Thank you, Senator Klein. I think that's a wise comment. And I would note that blood pressure cuffs are already exempt, so we have some exemptions in place. So we would need to, Senator Howe, if you want to further modify this, certainly you've got some assistance here at the table and with staff, if you would like to do that. Any further comments? Well, Senator Howe, closing comments.
Thank you, Madam Chair, and I think those are things that we can look at and maybe amend and go further. And I appreciate the comments, and we'll continue to work on it.
Thank you, Senator Howe. The bill will be laid over. Our next bill is Senate File 3880. I will move that, and then I'll bring the gavel down to Senator Weber.
We will now turn to Senate File 3880. Senator Nelson, you may proceed when ready.
Well, thank you, Mr. Chair. Well, this is a bill that is, perhaps you might say, a little arcane. It's not like dogs and cats, of which we are all familiar, nor does it deal with those medical things, of course, that we're all familiar with. This was a bit of a new issue for me. It actually has to do with tax modification for premiums paid to non-admitted captive insurance agencies. And even as a insurance person myself, there's a lot to be described there in what is meant by captive insurance companies in this bill, and then about those premiums. Senate File 3880 addresses the taxation of those captive insurance companies by the state of Minnesota. A captive insurer is a unique type of insurance company that is owned by a parent company. So think about that. It's owned by a parent company, and the sole purpose is of insuring the parent's company losses. So it might not be like it's not the captive agent that first comes to mind, like a Allstate or Farmers, that type of captive agent. This is a captive agent specifically owned by a parent company with the very sole purpose to insure the company's losses. And there are many reasons why, obviously, a company would choose to utilize a wholly owned captive insurer. I'll just list a few common reasons for you. And, well, no, actually, I think I'll turn it over to my testifiers to list those reasons for you, and then we'll talk about why this legislation is needed. So, Mr. Chair, I have several testifiers, and, oh, I did not bring up my sheet, so if you would call them up, please.
Thank you, Senator Nelson. The first one that we have on the list is Brad Colin, Risk and Insurance Management Society. Welcome, Mr. Colin. Please identify yourself for the record, and you may proceed when ready.
Thank you, Mr. Chair. Good morning, members of the committee. Good morning, Senator Nelson. My name is Brad Colin, and I'm here today representing the Minnesota chapter of the Risk and Insurance Management Society. The Risk and Insurance Management Society is a nationwide nonprofit organization dedicated to the practice of risk management. It has 10,000 members representing 3,500 entities. Our Minnesota chapter has 168 members representing 82 entities. Aside from my volunteer work as a board member and legislative committee chair for the society, I'm a full-time director with the finance group of the member-owned cooperative Land O'Lakes. I'm here today to ask you to support SF 3880. a bill that addresses taxation of captive insurance companies by the state of Minnesota. As Senator Nelson mentioned, a captive insurer is a unique type of insurance company. In its simplest form, a captive is a wholly owned subsidiary created to provide insurance to its non-insurance parent. Captives are essentially a form of self-insurance, whereby the insurance company is owned wholly by the insured entity. Captives are formed to meet the unique risk management needs of its owners. Typical coverage provided by a captive insurer includes workers' compensation, general liability, professional liability, property insurance, et cetera. There are many reasons why a company would choose to utilize a wholly owned captive insurer. A few common reasons are captives can provide insurance coverage that is not available in the commercial marketplace. An example of this would be a parent company that is insuring their per-claim deductible through commercial policies. A large company may indeed actually have a large deductible that's forced by the commercial industry. And this is one way for the entities to finance that deductible. Captives also allow companies to fully pre-fund losses in the year that they occur. Captives reduce the overall cost of claims, allowing companies to put its financial resources where they need to be, the care of our injured workers and customers. As the taxation of non-admitted insurance premiums varied from state to state, in July 2020, as part of the Dodd-Frank legislation, Congress sought to address the myriad of state non-admitted premium tax rules. The federal legislation, however, did not address captives specifically or captive insurance companies. In 2011, Minnesota adopted the language included in the Dodd-Frank legislation and related definitions. The reporting requirements were effective for 2012. The Minnesota provision tracked with federal law and did not specifically address captives. In the fall of 2020, the Minnesota Department of Revenue made an administrative change to Form IG 255, specifically adding captives and captive insurance companies. In this form change, the Department of Revenue effectively and without legislative change extended the premium taxes to captives. Again, the key reasons to make this correction are neither state law nor federal law, Federal Not Admitted and Reinsurance Reform Act specifically name or address captive insurance companies. Owners of captive insurance companies with their headquarters located in Minnesota are now, by the 2020 form change, subject to Minnesota premium taxes and premium taxes in the state where their captive is domiciled on the very same basis, the premiums of that insurance company, leading to double state taxation paid by the parent organization. Under the current tax enforcement, a company that has an operating plant located in Minnesota, but not their headquarters, i.e. the home state is defined by Minnesota statute, does not have to pay this captive tax. However, a company headquartered in Minnesota with a plant in another state is required to pay a state of Minnesota a premium tax to ensure that other location outside of the state of Minnesota. Thank you for the opportunity to speak on this matter, and I will stand for any questions that you may have.
I would have one question, and not having an insurance background. A captive insurance company, okay, I understand it's owned by the parent company, who is not an insurance company. In order for them to have proper capabilities to pay claims, do they go out and buy insurance from a larger company, for example, to cover catastrophic losses and that type of thing?
Yeah, thank you for the question, Chair Weber. It's a variety of solutions, and each captive is unique. However, most of the captives that I know of within the state of Minnesota provide the primary funding within that captive entity. So let's take the case of the state of Vermont. The state of Vermont is one of the largest domicile locations for captives. And the state of Vermont has very strict regulatory requirements about the reserve to surplus, how much cash is in there that's not only provided by an actuary, it is reviewed by an auditor, and then reviewed by the Department of Regulation in the state of Vermont. So it is a very structured organization and entity to make sure it is fully funded to meet the obligations encumbered by the insurance company. Now, the captive insurance may actually access what's called a reinsurance market. That's typically not in the scope of what we're talking about here. We're talking about a parent organization self-funding for losses that have happened or may be known to happen, and then putting money aside to make sure that proper care and treatment is provided for that claim.
Okay, thank you. Any other questions, members? And I don't see anything. I think we're safe. Okay. I don't see anything, any members online that have a question either at this point. Now, Madam Chair, you mentioned testifiers. This is the only name we have on our list. Are there others?
Thank you, Mr. Chair. No, there's not plural, there's just a single
Okay.
testifier. But I would like to add some further comments and discussion. And I just want to make sure that members are aware. There's a couple of great concerns here. One is, well, I'll start with what I think is probably the most egregious, and that is that the department seemed to make a policy decision about what should and should not be taxed. And they did that through revising the form, IG 255. And I would ask members to note, I believe you might have the letter from the Minnesota Business Partnership in your packet. I'm not clear if it is. I'll share if it's not. I see heads nodding. So our Minnesota employers have been trying to work on this with the department for a significant amount of time now and have not been able to resolve this. But I would just say, as tax chair and members of this committee, it is to those of us who have election certificates that make these kind of decisions about what is taxed and not taxed, whether it be taxing our rescue shelters, or whether it be taxing medical equipment that can help us better monitor our health at home. It is not the role of the department to make these type of decisions. So I want us to just think about that first of all. And then I want to just address a couple problems with how the department has or maybe unintended, maybe intended consequences of the department's decision. Number one, this would put double taxation on those premiums, both in Minnesota and in the same premiums would be taxed in the home states as well, or the other states as well. And of course, that's a principle that we do not ascribe to, is that type of, or we tend not to, that double taxation. And then I am aware, and I'm not confident if there's someone here who would testify to this, but we could perhaps ask the department to talk about these VDAs, these voluntary disclosure agreements, which quite frankly, I find, I'm just stunned actually that this would happen in the state of Minnesota. And so this change, as our testifier said, actually goes back many years and implements then this new regulatory change, which is actually a legislative authority, but goes back and then moves this back retroactively. And my understanding is that the businesses are offered, if you perform this voluntary disclosure and bring these previous years of data into compliance with this more recent adaptation by the department, that then instead of the DOR charging you for all of those years under which you were operating under the law as it is, not as reinterpreted by the DOR, then you'll have a reduced liability. And members, I am very concerned that that is happening in our state. It is not what we would expect. It's not what we should allow. And I am concerned that the department would be putting forth these VDAs, and then it almost sounds like a bit of extortion. And I'm also very concerned that this is a policy decision that belongs with people with election certificates. So those will be my closing comments, Mr. Chair.
Thank you, Senator Nelson. With that, Senate File 3880 will be laid over for possible inclusion. And then while we're changing the gavel here, we will have Senator Klein come forward, and he will present Senate File 1916. Welcome to the committee. Senator Klein, you may begin when you're ready.
Well, thank you, Mr. Chair, and I'd like to place Senate File 1916 before the committee, and I have an A1 amendment, sir.
Oh, thank you, Senator Klein. Members, do you have the A1 committee in, or the A1 amendment in your packet? And Senator Klein, is this your first stop?
This is my first stop, and this is a purely technical
This is
amendment.
an author's amendment. Would you like to describe it now, or we can adopt it as an author's amendment and you can incorporate it and describe your bill as amended?
I can describe it, Madam Chair. This bill was introduced last year, and in the meantime, we've made some updates to this section of law, and this merely conforms to those updates. It's technical.
Okay, thank you, Senator Klein. All those in favor of the A1 signify by saying aye.
Aye.
Opposed, same sign. Your amendment is adopted, the A1. Senator Klein, to your bill.
Thank you, Madam Chair, and thank you to the committee for hearing Senate File 1916, which deals with charitable contributions for people who do not itemize their income tax deductions. So during the pandemic, the federal government temporarily allowed taxpayers who chose the standard deduction to also deduct certain cash charitable contributions. For tax year 2020, the CARES Act allowed up to $300 in cash contributions to be excluded. And then for tax year 2021, the Consolidated Appropriations Act allowed up to $600 exclusion for married joint filers. But Minnesota never conformed to those provisions, and this bill would simply conform. It would update Minnesota law to conform to the Internal Revenue Code retroactively to year 2020 for both provisions. You know, at the time, the provision was meant to encourage donations to nonprofits that were filling many pandemic-related gaps. This bill retroactively conforms, so while it may not incentivize any new giving in the current year or in future years, it could be viewed as a reward to the many Minnesotans who did step up to help charities serving people during the last 2 difficult years. Minnesota, Madam Chair, ranked number 2 in the nation in Wallet Hub's most generous states in 2020 and number 3 in 2021. We pride ourselves in generous giving, and this would be one more way to recognize those who stepped up during the pandemic.
Thank you, Senator Klein. Senator Klein, do you have any testifiers?
Madam Chair, I have no testifiers.
Very straightforward bill. Members, any comments? Senator Rest.
Thank you, Madam Chair and Senator Klein. I think this bill is similar in intent to the bill we heard from Senator Bingham regarding conforming on the payments made to restaurants and so forth during the pandemic that we had before us, and it is it's conforming. It was, I think Senator Bingham's bill was not retroactive, but I think it's done in the same spirit, and there is a cost. Probably not a whole lot of people are going to go back and amend their returns, but I think it shows the right attitude on the part of the Minnesota Senate. Thank you, Senator Klein and Senator Nelson.
Thank you, Senator Rest. Yes, we did hear the Senator Bingham bill, and I will just add, members, there's a significant amount of conformity yet. The tax committee understands that. That is important for Minnesotans as they seek to file both their federal and Minnesota taxes. This would be one of those conformity items, as was Senator Bingham's. And I believe you have some, probably every one of us here has some conformity items before this committee. Any further comments? Senator Weber.
Thank you, Madam Chair. Just a quick question. Maybe the agency could answer this. I was reviewing state tax forms, and in the subtraction form, M1, M whichever, there is a line for charitable contributions, and then it goes on to explain what the formula to compute them, and I'm just wondering how that differs from what you're proposing here, Senator Klein, and maybe you know offhand.
Senator Klein.
Madam Chair, I believe I do know, but I think the department could probably answer it more eloquently than I could, so if I can call
We
it.
have Ms. Pollack who can answer right here.
Madam Chair, Senator Weber, Senator Klein, Yes, there is a subtraction under current law for taxpayers who do not itemize. The subtraction is 50% of contributions in excess of $500. So there could be some interaction if we were to conform to this provision and the current provision. The interaction gets a little complicated because the kind of overarching language for our state subtraction says that they only apply to the extent that you haven't used the amount you're claiming as a state subtraction in reducing your federal adjusted gross income or federal taxable income. So again, this would be the kind of double benefit issue. So in order to use both the conformed federal exclusion and the state subtraction, you would have to have made a charitable contribution in cash of up to $300, which is in Senator Klein's bill, and then an amount in excess of $500 in order to claim the state subtraction. So, you know, as a policy goal, the committee may wish to consider that interaction and possibly, if the legislature were to conform, some kind of temporary workaround to avoid complications in the interaction.
Thank you.
Thank you, Ms. Pollock. Thank you, Senator Weber. Any further comments? Senator Klein, any closing comments?
Thank you to the committee, and thank you, Madam Chair, for hearing the bill.
Oh, you're welcome. Senate File 1916 will be laid over
As amended.
as amended. Thank you. Members, we have reached the end of our agenda today. Our next hearing will be Thursday, March 31st, and we will see you then. Committee's adjourned. Thank you.